chief economist at Stifel. Lindsay, welcome. Good to have you with us. Why are you on the low side, I would say, of so many of your colleagues who think there are more interest rate hikes in the pipeline? And is that in any sense a change for you or a reset because of what's going on in Ukraine?
Well, I think the Fed is facing a very difficult challenge at this point. Yes, they do want to rein in inflation, but the committee is also aware of the still fragile nature of the economy. With the recovery is shaping up to be very anemic, very moderate in nature, even before the invasion of Ukraine. Now, the Fed is also aware that a good portion of the price pressures that we're experiencing in the U.S. economy stems from the supply side of the equation, rendering traditional monetary policy metrics less influential on inflation or reining in inflation. So when we talk about raising the cost of capital, the Fed hiking rates, yes, this can slow investment. Yes, this can slow demand, but it does little to address supply chain constraints. So the more that the Fed continues to raise rates, the more aggressive the Fed is, the more likely they are to choke off growth and force us maybe not even into recession, but into a scenario where we're still dealing with higher prices, but also then contending with the effects of a slower economy, i.e. stagflation. So I do think the Fed needs to raise rates off of these crisis levels, raising rates 3 times, maybe more during the year. But again, the more aggressive the Fed is, the more likely we fall into recession, something that the Fed does want to avoid.
3 hikes during the year would end us where? At 7.75%, a little under 1%, which is historically a crazy low number.
Absolutely. These are still very historically low levels. So the Fed is still feeding the monetary policy punch bowl to the economy, to the marketplace. But again, when we look at the underlying momentum of the recovery, we're talking about reverting back to pre-pandemic levels, which, if you remember, was just around 2%. So we're not talking about a stellar economy, stellar growth. We're talking about a very fragile, still very moderate consumer, moderate economy. So the Fed doesn't have as much wiggle room as they would like to raise rates without choking off growth. Now, the question for the chairman tomorrow during the press conference will be, is the Fed willing to raise rates so aggressively that we do go into recession? Where's the balance? Where is the Fed's focus? But if the Fed does continue along this pathway, as some have forecasted, 6, 7, 8 rate hikes, that will very much ensure that we fall into negative territory.
Good morning, 10:34 a.m. Eastern Standard Time on the East Coast in the United States of America. I'm XRP Future Millionaire, and we have a lot of stuff to talk about. We have our meeting finally finishes up today at about, I'd say about 4:30. We're going to have a lot of stuff that they go over. Gold's getting hammered once again out of the gate. I don't want to say hammered because it's only down $11, but it's approaching that $1,900 an ounce like I told you guys yesterday. Well, I've been telling you guys. It's got to come down to the uptrend. It's that simple. I told you guys, do not buy gold. Do not buy commodities unless you want to get hammered when it got up to $2,050. And now we're down better than $150 an ounce. Silver's down better than, almost $3 an ounce now. $2.40. We've got commodities getting hammered. Crude oil is down better than $37 an ounce, or a barrel, since it was at the top. It peaked all the way up at our top section. So this is exactly what we thought was going to happen. And now we're going to have to come back down to a serious uptrend. And you know what? I know everybody wants to see crypto. So what I'm going to do this morning is I'm going to start out with crude oil. We have a very, very desirable uptrend. It actually... yeah, it definitely broke that uptrend, didn't it? Yeah, it did. That's why we came back down and tested this line to see if we could hold that or not. But we are on a decided channel as well. We could come out like this and just say we're on a channel instead of an uptrend and just say, hey, this is the channel. And it would work. I'm pretty sure it would work. Yeah. So you could say this until it breaks down. You could say something like that. It could be expanding, extending, or you could just pull it in and say we had a little fake out. But if you do that, it would be more like this if you write it down. So with that being said, we're getting back towards the bottom of the channel. Now, if we were to break out of this and break down, even though it looks like the head and shoulders is pretty much complete, I would say this is where PBR is probably getting better, getting back into the opportunity of buying again. So I showed PBR. Okay, so let's get to Bitcoin. So we got the total crypto market cap up 2.73%, and I apologize, I'm a little tired this morning. My son, and I can assure you it was not fun. My son had me up until almost 5 a.m. So that was fun. So I'm coming at you with what it would be a live update, or an early update for me, because I only fell asleep for about 5 hours. Got up at 10, and I figured I'd come on and do an update. So Bitcoin, again, we're coming to the end of this pattern. And eventually we're going to have to break through this. The more times you come up like this and don't break through, let's bring the volume out. It's an issue. Here we can even bring out that. We'll bring out the RSI. So we have a rounding of the bottom. We've talked about the possibility of, in class yesterday, we talked about this the most. Are we going to start a bullish divergence? And in XRP, we were looking in the daily time frame because we had started rounding and it was very, very close. But in the 4-hour time frame for Bitcoin, you can see how we're going to either come up to a fake out or we're going to make this real. And we have to come through, the 20 has to come through the 50. And once the 20 is getting supported by the 50, that's very bullish. Even if it's only to come up to past the 100 and get rejected, it's very bullish when the 20 crosses the 50. So we are very dangerously close to having the start of a bullish divergence on the 4-hourly. And that would simply be the red line coming through the orange line would be the start of it. So we are very close. We have a pulling up, which can be bullish. We have a rounding of the bottom to push up. So, and XRP had created that divergence a long time ago, but that's why I said in the daily time frame with XRP, it's yesterday it had just crossed, and this is what we talked about in class. This is literally just crossing. So if XRP is going to make something happen, you know, it's basically at the bottom of where this bullish divergence starts in the daily time frame. Well, if you finish a bullish divergence in the daily, it's getting you to 91 cents, and that's all I've been saying. And that's the overwhelming thing. Can it get there? And we did come back down last night. We have a 1, 2, 3 times here we hit. Our new daily, we haven't come down here yet. We're only hitting the uptrending support, which if it has a daily close right here at 75, because when the close happens, it should be closer to 75, I would imagine. It's going to try to test that again. Unless we have a rally here with volume. But again, the daily volumes are very low. The daily candlestick volume is very low. For being 22 hours, or not 22, 13 hours in. Or more than that. What are we at? 15 hours in 9 minutes. That's staggeringly low volume for the uptick. So that doesn't look great. A lot of traps can be set today because of the meeting. All the stuff's coming out today. I'm going to play the end of that video that I had started with right after this, so that you guys can see what they're talking about if they think he's going to be hawkish or dovish. That's how the end of that video ends. I just didn't want to play the whole thing before I did some TA. So that's what we're looking at with XRP. That's what we're looking at for Bitcoin. It's literally, can we break out past these resistance areas? 77,876 is XRP's, but as you can see, every time it pulls over this, it just comes right back down very quickly. Did it last night again. So that's what we're looking. This is what we're paying attention to. If I had to guess, my best guess is that we're going to fill out this pattern, but I wouldn't be surprised if we ended up there at 45,300 again. Assuming we could get some volume here. Bitcoin has more volume in the daily than XRP. But we're going to need more volume than this to confirm a breakout. Otherwise, it's going to need to go. And then it's going to figure out when it gets into here. But we're getting awfully close, guys. Awfully close to making a decision here. And now we're on the top side of this symmetrical. So if we do hold this as support, this is how you would buy in and make a run. So if we come in dovish, this is setting up for if Jerome Powell and the Fed comes in dovish, this could take off. So we need to watch to see if they're dovish or hawkish. XRP Future Millionaire. Best advice I can give you, join Tom's Army, $9.99 a month. Get the exclusive Telegram. Get in, be able to join the classes. We have 260 members. A great return after the last few months. A lot of times we lose a lot of people. Only lost a couple people this month and gained a couple more. So that's filling up the spots that we're losing. Get new minds in here. And sometimes it's good to shuffle it up a little bit. I do appreciate each and every one of you. And honestly, this is a great group that you can even do a case study and see what the general public is thinking. If you have problems trying to find other people in crypto that have the same interests, or if you have trouble trusting people, come into Tom's Army, $9.99 a month. You get the Telegram for free, and it also allows you to have the opportunity to take the classes on Tuesday, Thursdays, and Saturdays, 8 to 9 p.m. Eastern Standard Time. And you don't have to pay monthly or anything like that, and it's $5 is all I ask for the classes. $5 a class. If you can't afford that, come talk to me, and we always work something out. Now, before we go back to that, I want to talk about XLM. We're basically within the symmetrical as well. We've got a little bit room to the top side. To come up to the top side of here, we've got until about 18.8 or 18.9 area, depending on which one we're taking. If we're taking the uptrend, we don't want to break the blue line that it's closest to right now in the uptrending support. If we're going for more of a symmetrical style, this is more of a, like I said, the symmetrical, though, is just a small little piece I drew in to make everybody happy, to make it look like it's a symmetrical. I think we're in a falling wedge right now for XLM, and until it breaks out of the falling wedge, we've got some problems. Or this is the other thing, like I was saying yesterday. So, I might as well just keep it on here so that people don't get confused. You can come out like this and say we're in a symmetrical, right? But that's a downtrending support, downtrending resistance. So that's a descending symmetrical triangle if you look at it like that, and that's very bearish. Once we get to the bottom of this, it's going to have to drop out a little bit if it doesn't break out of this pattern. And right now, once again, it's proving that this is a falling wedge. And I have every little drawing out here that you could possibly have this pattern, but I believe it's a falling wedge for XLM. And once it breaks the 16.6 support, I believe it's going down to 10.9 if it breaks that support, and that would complete the falling wedge. Then you'd have a retest of about 19 cents after, which would be phenomenal. And then DGB is at 1933. I think DGB could very well be in a very similar style pattern, but it would have to be something like this. I think it too. Where's this? I wanted to line this up for DGB because it really looks like it's in a falling channel, falling wedge as well. I think DGB and XLM are a lot more similar in pattern than a lot of people realize. I think they're both in falling style wedges here, and it's getting tighter and tighter on it as it comes down. Now, what I would say though with DGB, just like XLM, we could come from here and say that we're starting like a descending triangle. We really could. And it would look even better if we came over like this. So where does it end is the question. Are we in a descending triangle formation if we do something like that? Or are we just in like a falling wedge? And this is supposed to be farther out. That looks terrible. Because it's something like this. Actually, it could be a channel, but I think these are kind of like wedges. They tighten up at the end. But you can say channel, and this one you could say it's in a wedge. We're going to find out. But that's what we're looking at for DGB, and it is not good. XRP Future Millionaire, make sure to hit that like button. Don't ignore what I'm saying because no one's going to tell you it this bluntly.